Well, look, man, why don't you kick us off by giving an intro? I mean,
The biggest bank in Florida.
no, Surety Bank,
Yeah.
right?
Just shy of what,
You're the
250
clever,
million.
money-making, innovative, right?
Smartest
Throwing
bank.
it down in Florida, the smartest bank in
Smartest
Florida.
bank in Florida.
There you go,
Oh
man.
yeah, what was it? We're looking for quality of life here, like you guys in Texas.
Yeah, so we always tell everybody you want to grow the profits, not the organization, right?
Right.
Yeah, don't
Yeah,
grow the staff.
and then biggest like don't grow if your margins don't increase, then don't grow. You're doing it wrong.
Yeah, you can't
That's
make
it.
that up on volume. That's right.
No, you
Yeah.
can't work yourself to death. Anyways, yeah, I'm Ryan James, President and CEO of Surety Bank. We're located in Central Florida. Surety Bank's been around since 1926. We were the last actually building and loan in the state of Florida, and converted to the state chartered in 1990. Yeah, the state of Florida came down to the board of directors like in the late 80s and said, "Hey, we don't want to audit just one building and loan. You guys mind changing your charter?" And so at that time they had like $1 million on in equity, and they had to raise another $1 million, and that was it. $2 million to have a bank in like '89. So they did that, and I came along in 2001 and out of college, and started there. We our chief financial officer at the time, they even called her the cashier. That was the old terms that they used.
Yeah.
And she had some health complications at her tech, so I started doing the financial call report within like 6 months, and off to the races. But yeah, what we do now is we fluctuate to 200 million, 250 million. And a lot of our growth is national, and we're experts on anti-money laundering. We've crafted that niche because we just saw big banks we think do it really shitty, and so we go in there and do it well and have a niche in money service businesses, cryptocurrencies, and even banking cannabis.
Love it. Hot topic at the moment, right?
Yeah.
We talked a little bit. So hey man, be sure to plug your new podcast, man. Paper
Yeah,
Podcast, Surety Bank. I was on there earlier this week.
Yeah, I've started a podcast, the Paper Podcast, and besides you guys cutting through the bullshit, I just saw that there wasn't like any actual practitioners that were doing any kind of banking related podcasts. And it's frustrated the hell out of me over the years, because when I went, small bank, I had no mentorship going forward. It was blank slate. When I became CEO, there is no roadmap when you're CEO. I mean, you've got to think it all up on your own and go into an area and just do it. So when I would go to like a lot of the banking conference, they were just talking about the same shit year after year. Oh, credit unions, they're horrible. I'm like, you're not going to get the local congressman to vote against, that credit union when they've got all these members, and, well, they're doing their one thing, find something else, it just was killing me. And then a lot of the other podcasts, it was, once you dug into it, it was, they're being funded by their sponsors, and their sponsors are the newest fintech that's garbage that's pushing. So it's like, wait a second,
An agenda. Yeah.
Yeah. And so I want to talk to people that actually do the work, that put it in practice, not, professors that, they've taught for 30 years, but they've never ran a freaking company. So
We feel the same
You,
way,
you
man.
nailed everything of why we are who we are and what we do is exactly that. I mean, look, when we started the roundup, everybody was like, why are you starting? I'm like, we don't know anything about running a conference, but I know everyone I've been to for 35 years sucks. And
Awesome.
it's got to be a better way, man. And so it's the same thing with I almost was ready to read your line for you there when you were talking about watching the other podcasts. It's, let's get in a suit and tie and act like we're in our living room. And it's like, you're not in your living room. Everybody knows that. And let's slaughter out a bunch of buzzwords so that we can look like we're smart.
And keep it at 10,000 feet, where it's like, I just listened to a bunch of basic elementary level stuff, right?
Right.
That's one of the things, man, I really liked coming on with you. I think we bullshitted for 45 minutes.
yeah,
Really, the last 15 is the real stuff, right? Where you actually get into something,
So, man, how did you guys get to be these AML experts? And do you sub that out to other banks? I mean, how does this work?
Oh, that is one thing, like BSA and AML, wholeheartedly, you have to do, you can't rely on a third party. I just don't feel that you can. You got to do it in. And
So where did you get the expertise for that?
so yeah, I'll tell you the quick origin story, or We financed a lot of gas stations in the 90s. So when I came into Surety Bank, I'd say half of our portfolio were gas stations and convenience stores. And, because a lot of the contamination big banks were afraid of and everything. But if you follow the guidelines, you get your phase one, if there shows anything, get a phase two, go through that. I mean, I swear I nearly got a PhD in, contaminants and oil contaminants because I've been through so many lawsuits. But, so we did a lot of gas stations, and a lot of gas stations would cash checks. Well, they're cashing them for, their local people that are going there on Friday. So they would cash a check, sell a 12-pack, carton smokes, whatever, and provide that service. Well, they hit a certain level, they have to have a license. And, so we already had the gas stations and we'd cash their checks. Well, next thing you know it, you would see their cousin come over to you, open an account. And we're like, okay, why are they doing that? Oh, well, that bank shut it down. We're like, look at them. Yeah, okay, my teller spent 15 minutes and you've got $100,000 in your account. Yeah, I'll take you.
Mm-hmm.
And then it kept going. Then as examiners would come along, they would say, oh, well, are you doing this? Are you doing that? They just had a negative connotation to them. It was like, okay, well, you didn't grow up that way. This is needed. So I'm like, I'm not getting rid of this account. I'll I'll just complain. Oh, you want me to do a site assessment? Okay, great. So did that. And as it kept going and, with remote deposit capture, you put in the box, we just said, you know what, we're going to do this. We're going to do above the guidance. So when you come in here, we're going to tell you how we're really doing it. And so, there's not another bank. We're the only bank that I've ever heard of that is data mining the actual payee and payor on all of the scanned checks. So we're not looking at just a router. So we go above and beyond, and we're looking at, and that's where we see suspicious level most likely, because by the time the MSB, I mean, these are people that they've applied for license. They have their own working capital. They're trying to do what's right. They don't want to cash a bad check because they're losing their money first,
right?
Not us. They are. So we underwrite them ahead of time. And then by the time that comes along, we just building, when we see a network of check washing out of an error, we send alerts and let them know and then support them. And, and then seeing how after 2009 collapse and how I was treated by the regulators as a community bank, could only imagine the way they were treated. They're legal abiding citizens providing services to needy communities, and they're being treated like garbage, and the way I was being treated in 2009, 2012 by the Atlanta region. So I'm like, screw that. We're going to do better than everyone else. And just grew it from there. And as we developed that compliance and just kept on building the bank and looking at ways that smart automation.
So you kind of walked it. This is what I think is a big problem with just the industry. I mean, if you go to Washington, D.C., and that's not, it's like Hollywood. It's a different thing than what the real world is. And so if you've ever been I was that guy that went and bought a pack of smokes and a 12-pack.
I know, he had me at the 12-pack. I'm like, can we get Coors Light in a bottle?
Right. I used to do that, man.
Yeah. So I remember getting sent in with a, $10 bill to buy smokes at 5 years old in the gas station.
Yeah, you should check at the gas station. I mean, but this is why I love community banking. You took that and didn't see the negative connotation with it. You saw the service level of it.
Yeah.
And say, okay, as we begin to progress into that, and then, hey, whether it be cannabis, whether it be fintech of any kind or whatever, it's like, hey, look, I can see how I can take that same principle and just expand that. Is that basically how you got here?
Yes. And that is, and then kind of, then knowing and dealing with regulators. The other thing that would frustrate me is they just assume you're a small bank, you weren't up to date. And that just pissed me off because, I learned real quick when I first became CEO in 2009, the market collapsed. Within 3 months, I had a 2-day drive-by hit where the FDIC would come in and do that. You remember that? Mm-hmm. They would just look at your call report and call you up and say, hey, Ryan, I'm new CEO. I'm going to come visit you. I was 30 years old. Hey, happy to have you. In 2 days, he charged off 20% of my capital. And, that was a big hit. But he was correct. Those
Yeah.
loans,
Come on,
I
man.
know he'll pay.
Yeah.
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 those loans were, the collateral wasn't there and the ability to repay wasn't there. So I learned a lot. We doubled down, but we had capital. We weren't running at a 6%. We were running at that time at 10 and 12. So we never dropped below 6%. But so just that kind of went on a different tangent. I forgot where it started with, but
That's the path that leads you here, right? Look, you said something earlier, when you talked about playing at the data level of things, I got to thinking about if you've ever had to run anything in item processing and duplicate detection and multiple capture points and blah, right?
Yep.
And what you described, it sounds similar to almost like running your own internal, like SARS, a bad analogy, right? I mean, duplicate detection and SARS kind of playing together in some weird thing. That's cool, man. I dig it.
Yeah, I mean, our little bank, for the level of CTRs, we file, nearly a couple thousand CTRs a month, and we're, 220 million.
We're drug dealers. That's what we are.
Yeah, man. That's great.
And so I think our level of CTRs are up there with probably a $20 billion bank plus. Yeah, I mean, so that affects not. Oh, I was getting when I went to my first CEO exam, seminar, they were asking questions about troubled debt restructures. Mm-hmm. And so, yeah, like I said, 30 years old, nobody's answered a question. I raised my hand and I said, well, if you have a TDR, it's either collateral dependent on this or you discount future cash flows. And they looked at me like, that's right. And they asked another question. Nobody in the room knew it but me, out of all of these directors and all the CEOs. So clearly what I had up until 2009, the average CEO and lender had never known a bad time. So they were completely ill-equipped. And so I immediately left that meeting, said, I'm done. I'm going back. I'm just going to go visit my customers that are in trouble and see whether or not they have the ability to repay anything. And if we were to foreclose and get a new operator in that business, are they doing something bad where a new operator would run it better than them? Man, and it's a quick little scenario to do. And that's it.
So cool. I mean, God, I wish everybody was 100 years old. So what happened, like in Firea, when the SNL disaster and all that stuff? Okay, the people that were at the top of the food chain, by the time you came along, they're retired. Mm-hmm. And so that's what you're saying. Okay, there's this hole in the boat here where who the hell knows this stuff? We hadn't really done that before. Okay, and then you take a young guy that comes in here and is like, okay, I'm studying, I'm learning, I'm on top of everything. You really are on top of everything compared to the average CEO that hasn't gone through that before. And this is what spawned the whole banking as a service, the fintech, all the things that we're talking about here it's new people that come into the organizations, and particularly in the smaller organizations because of Durbin and other reasons, but also because they're willing to think outside the damn box a little bit. You got the banker out there that's like, we've been here since 1911 and we're not changing the damn thing. And it's like, and you'll be gone. Don't worry about it. But the other guys are over here going, yeah, we've been here since 1911. We haven't really grown much since then. What can we do? And that idea right there of what can we do is what really spawns this whole system. And it is the biggest moneymaker in banking by 100 miles that I've ever seen. And it takes a new brand or a new leadership from a new generation to really get that. And the board level, a lot of times, will be the stumbling block for some of that. So it takes a combination of and here's where it really, I got to get this out of my system. Yeah. This is so cool. So you got this new breed of CEO like you. I think this is like, so cool. And then you've got some of that bleeding into the boardroom now, which is really cool. You bet. And that sets up this opportunity right now where we've got a little bit of a downturn in the economy, the funding levels have shut off. There are fintech maniacs out there everywhere with talent just pouring all over the place. And bankers sitting here going, so what is this banking as a what? Banking as a service? Okay, there are talent players out there.
And banking as a service is, they think it's this crazy thing. I mean, it's just offering your banking services to them. Mm-hmm. That's it. They're out there doing the marketing, but I think there's some banks that do it really well, but then a lot of banks, they don't know what to do and how to monitor them.
Sure.
But it's not rocket science. There's financial institution letters out there that tell you how to do it. You monitor them just like any other customer, you know. But I don't think they're taking the time and put in that. But with the economy, not as much funding out there, I think we'll see the best fintechs coming out of this.
They're still getting funded.
There'll be a lot of mergers, but there's a talent pool right now that's pretty cool to grab a hold of.
I think so.
But what's really neat with all this, guys, is that you've got this opportunity moment in time where there's not that many. I mean, hell, 2 years ago there were 37. Now there's 112 BaaS banks. Guys, there's room for a hell of a lot more, a whole lot more. But it's a race. And people are already talking like, well, that market's matured. It's like, no, it didn't even come close.
No, and
it's going to be.
We're way too, and this opinion from you guys, but I think we're way too focused on what we've all looked at as fintechs, and especially sort of the challengers. Freaking Chime is a terrible analogy at this point, right? I like the affinity group a lot, right? I think I told you when we were chatting before, it was Filipino nurses. Well, there was a fintech for that. I'm like, brilliant, right?
Obsidian,
that group. Yeah, they're black banking in Detroit, right? And they're doing a really good job. But Affinity Groups is a good example. And then I think the lifestyle brand topic, right? I mean, look at Starbucks, look at what Coastal's doing with Walmart and Walmart employees, right? I think I tell him, let's look at the S&P 500, and all of those are going to be playing somewhere, right? Or large, So, I mean, there's a ton of market left, and that's before you get into clever shit like you're talking about, right?
Yeah, I think the failures when people, they water it down, like go ahead and pull in and get really specific on the target market you want to hit,
Right.
Don't be real broad, because the broad categories already got hit. If you want to be broad, people are going to bank with Chase. I mean, it is what it is.
Oh, good call.
Tim at Choice has a great line. He's like, just start with one and learn.
Yeah.
And then that's basically what you did, in your gas station analogy there, that it just it's not difficult or expensive. When people talk about, well, I don't know where we start. And I'm like,
Starting is where you start.
Give me a call. I mean, start with a conversation. This isn't very difficult. And what banks have traditionally had to do, if you want to grow your presence, you have to go build a branch somewhere, right? Or do an ITM or something.
Oh, yeah.
Man, build a branch. That's a hell of a risk, a very expensive endeavor. Getting into fintech BaaS banking, it's a smidgen.
And everybody's talking about, I mean, look, we've got some folks that frankly making a bunch of money. I won't name names, but have gotten into a little bit of hot water, surely. And so that has brought about this risk conversation of BaaS. And I'm like, what's the damn risk of building $2-3 million branches? The risk of playing some technology, and if things don't go perfectly, I'm still just fine the next day. But a bad branch move?
Yeah, Josh Rollins.
Who's going to buy that branch? You better be in a medical marijuana state.
It'll be a vet clinic, maybe, right?
A failure's bad. But these things don't typically crash your bank.
Yeah. They're all turning into cannabis locations here in Florida, all little banks.
Yeah. And I think in all these areas we're talking about, which is probably 5 or 6 different topics we've got to cover in here for those that are trying to keep up with us. It's the regulatory system by its nature moves slow, and it's behind, and they know they're behind. I mean, hell, they write papers about it all the time. We need to have better guidance on this. And it's we all know that. But in the meantime, the technology doesn't go slow. And so what people are doing in the trends in banking and the opportunity zone in banking, it's a little bit of
always is.
But the cool part about it today is, like we talked about the branch example, you don't have to take this giant leap to move into things. You can take baby steps into these things and learn as you go and get better as you go.
Can you guys think anything better than being a community bank right now? If I had to be in a business, I mean, what has more opportunity than a freaking community bank charter? I wouldn't want to be.
We have the keys to the kingdom. Every fintech has to have a bank. So, banks just shouldn't give away their services. They need to charge appropriately so they can monitor it and always be able to jump in if that fintech, can't pay their sponsoring for their card networks or whatever, and have that expertise. But in general, they shouldn't be afraid of fintechs. They have to go through them.
Well, I mean, we've all done pledge securities. We know how to do these things. This stuff is rocket science on how to collateralize a relationship to be able to make sure everything's okay. The other thing is, and Josh is what I was going to say about Josh. He brought this up about capture the information. So it's kind of like if I'm going to sub something out to a friend of mine and he's going to do things and we're going to work together, I want to know those customers. I at least want to have a relationship or have them know who I am. So one day, if he falls apart, I still have that relationship. Okay. And this is the beauty part. There is no, and I pound the table on this. Bankers, there's nothing a fintech can do that you can't do.
That's right.
Period.
I mean, what is it? Financial technology? The bank is financial technology all along.
So learn from it and figure it out yourself.
It was even when, you know, one thing when examiners come in and, you know, they want to know, you know, when you've had a new product, you have this, and for good reasons they ask that. So they want to look into it. But what was amazing me is when you go from opening accounts online from in branch, and they're just like, oh, that's completely new. And it's like, it's the exact same technology. You're just allowing the customer to load it instead of your employee.
Same with mobile deposits. Yep.
You know, and yeah, there's going to be fraud in it. So you're going to either put in your tolerances up front on that fraud, or you're going to weigh that difference, you know, on the speed of capture and less employee costs. So just if you know your numbers and your time and willing to accept and have it, you can work through it. But you know, that was some of their complaints beginning on, and it was just
we went through this a ton in the early days of mobile. I mean, things like account opening, right? And we did the same thing with mobile deposit, same thing with bill pay. And the regulatory stance is this is new. And I'm like, not only is it not new, but the risk profile is actually less than in other channels, right? And so if you think about some of the things, mobile deposit's a good example. I'll give you a great one is just being able to check a balance. And I'm like, are we doing secondary validation and getting somebody's DNA and social security number to find out their freaking balance? No, that's the same risk profile in mobile as if that guy walked into a branch, right? It's not like we're not going to measure and affect differently if the guy's trying to transfer $200,000, right?
correct.
So yeah, man. Hey, I'm gonna give you final thoughts. Anything that's on your mind in the planet Earth, like at all, whatever
you know.
Yes.
The devil came out. I wish I knew what just
there's a lot, you know. Recently with the news, like the whole FTX debacle and shit. I think some of the banks that involvement and the regulators, you know, I think they are just as much to blame because they dropped the ball. They were already having deposit accounts and things throughout the nation. And, you know, I can tell you firsthand because I've looked at it, I've turned down a ton of companies that sell crypto deposit services because they didn't have an AML plan and they didn't have any validation. So, I mean, they've been banking throughout the US. You know, did the bank that banked them have validation, have their AML plan, have their policies and procedures? And so that's what's frustrating me is the banks that are at that level that have, you know, they should have greater resources than a $200 million bank, but yet I would have never opened up their account. They would have never passed our smell test. Mm-hmm. So, you know, really, I would like regulators to think of that, you know, smaller banks, you know, they're smarter than the larger banks. You know, they really are. I will hire anybody, an employee in operations from a community bank over a large bank any single day. You know, they've got such a minute focus on banking. You know, they don't know what they're doing. So I would love that to kind of change up there with Washington, Atlanta, and you know, there needs to be more community banks. They need to be staying there. You know, to me, that is what sets apart the United States. I was in Costa Rica over the summer, awesome place. And that was we traveled a lot throughout the country, but we were at one of the Marriott properties that was like 20,000 hectaacres. And I noticed a local, he had a Mercedes, and I could tell he was overseeing. So I was talking to him. He had the contract to build all of the fencing throughout all of this, you know, Marriott. So I mean, that guy, I mean, just great, beautiful stone walls, and then you know. You have the finance? Are you borrowing from your bank? You know, I'm a banker. Do you borrow from your bank to fund your house? And he's like, no, it's too expensive. You go, what do you mean why it's too expensive? You've got contracts, I'm sure, from Marriott to do this. And I'm like, couldn't you use that? He's like, if I borrow 100,000, it's only for a year. I'm going to get like 10%. And every year I have to pay a couple grand in points. So I just fund it by cash. You know, so it never really hit me like, wait a second. Community bank model, we would have had that contract, and that was early this summer before rates even risen. We would have given him 6, 7, 8% to fund that. You knew your customer and you watched it and hit me. So like, I mean, we're going away from the community bank model, which is crap. We need that. That is what drives middle and small businesses throughout the US. They are 10 times safer. Subchapter S banks are way safer because to me, the directors have direct ownership in the future of the bank. They're just not getting a paycheck by being a director of that bank. Is more valuable than that. So, you know, we need to come back and support those banks.
Man, you are talking to the right guys on that. I've been trying to, get this across to not only friends, family, the internet, everybody I can ever think of to talk to about. One day, I don't care if you're 25 years old today, you're going to have grandkids that are going to need to get access to capital. And they're going to get it through a community bank, or they're going to have to go beg on their hands and knees to the big 4 banks in this country, and they're not going to get it. They're going to serve the Halliburtons. They're not going to serve the mom and pop guys. That's just not going to happen. This is a cog in the wheel, a piece of our supply chain, of our financial supply chain. We do not want to let this go the way of the mom and pop drugstores,
right?
So where we got a food chain of CVS and Walgreens, and we got a couple of banks that can control everything. It will be a disaster, and it can be saved. And we found ways that you're one of the guys. That's why I love you, man. He's super profitable right here.
Well, that's like we're 200. We've 200 to 250 million in assets. And you know what drives me nuts is when I talk to, well, how big do you want to be next year? Do you want to be $1 billion? No, I don't look at that. We look at return on equity and network sustainability. That's what we look at as our freaking metrics. I don't care if I got 1,000 new customers if we're losing that. And that should be the focus of banks, not just layering on loan after loan. Well, we got to hit this target because, I was amazed this summer. I had a loans pay off from customers that, they don't bring their financials in, and it was, we knew they would pay, but they were good pay, but their tax returns, never truly cash flowed perfectly. And I'm like, and that bank gave you a 4% for 10 years. Oh, great. Well, they're not going to be here tomorrow to fund you. So go for it.
Yeah, don't worry.
Right. Love it. Love it.
Yeah. So, in any bank that says they got to be at a certain size to have economies of scale, they're lazy is what it fucking comes down to.
We say it all the time, man.
They're not working.
Yeah, the fintech guys are buying the smallest charter they can find so they can get a hold of the payment system and the charter of the institution. It's the most valuable thing in the world. And yet everybody says, hey, we need to merge these 2 banks together so we have scale enough to make any money. Look at you.
Yeah.
You think you make any money? You don't need to have scale.
That's right.
No, not at all.
Well, it's not like a few $100 million isn't, I mean, right? If we were running a freaking hedge fund, we'd be like, oh my God, 1%.
Oh, yeah. I mean, we've been plus, except for like the 2009 to 2012, even Surety Bank from 1991 to 2005, we outpaced, if you had shares in Surety Bank, we outpaced JP Chase. I think at that time, nationally, like 6-1. We would have paid out like $60 in dividends to their 10 or 20.
That's awesome.
And, even right now, over the last 4 years, we've averaged over a 30% return on equity.
Love it.
And,
let us know if you're looking for investors, man, as always.
Here's the cool part. If you can't see what's going on here, if he wanted to grow the asset side of his bank, it's not going to be that difficult, right? I mean, if he said, hey, okay, I'll just go me a fintech partner over here that'll fund that, you could blow this thing up to $3 billion anytime. But it's not necessarily in your interest to do so.
Right.
And why would you?
Yeah, I mean, we're very cognizant of who we take on. And we also, too, I mean, when we're taking on new MSBs, or if it's a little bit larger or this, we meet with the group. Do we have enough employees? Can we service it? Can we go from there? And we also never want to be in the position that we're beholden to one customer or one relationship. You're always being in that position. If that relationship's gone, great, done. I'm not going to have to fire. No employee is going to be fired because we lost one relationship. So we're going to maintain capital.
Everybody on the revenue side of the business, he says, we build successful companies with small bricks.
Yes, it is extremely true. And if you need millions of dollars to start a product, then it's probably a bad product to begin with.
When you get 12 million customers and we're almost at scale of where we can make a profit, it's like,
Yeah, multi-billion valuation.
Let me say this, Ryan James, you are, man, you're my hero. You are the epitome of what we love about community banking. You're the proof case that you don't need to merge your bank with somebody else. You just got to make money. And there's other ways to make money than the traditional method. Think outside the box. You're the guy.
Yeah. Man, I appreciate that. And coming from you guys, cutting through the bullshit means more to me than you know.
Hey man, we appreciate you, and being call report guys, right? We've been long-time listeners, first-time callers, man. So thanks for coming in.
I know that's the first thing I do when I look at banks. I re-engineer their call reports and look at it, and I'm amazed that other bankers aren't even looking at that. Or software companies, they want to tell your size. I go, all right, I'm off the phone. You could have figured it out in 10 minutes.
Yes. See, this is us. We live in the call reports, and then we got the tech stack data to go with it. And it's like, this is not that hard to figure out all the cool people and what the clever stuff is, right?
Yep.
And so, yeah, man, we've been relying on you for a while, watching your ass do cool stuff and tearing up Florida. So we're glad to have you, man.
Hey, if you ever get lost in Texas, come hang out with us.
Come on.
Oh, man, Texas is my next favorite state. I love Texas.
Hell yeah. All right, man. Well, thanks a bunch for joining us. You're awesome. Anything else we can do for you, let us know, as always.
Keep doing what you're doing. I'll go to be at the next FinTech Roundup.
Sounds great, man. All right, we'll catch you next time.